house. Thank you very much for subscribing to our channel, YouTube channel, Pre-Versity Study Center channel. I want to continue the second part of our series in the 30 fundamentals of accounting and financial records. We have 30, but we did 15 in the first part. We are going to do the next 15 in this part. So I'm glad that you are here, you are listening to me, and I wish you success as you continue. Students and viewers, please share, like, and subscribe to our channel. I will start by starting with number 16. Number 16 is accrual and cash basis. There are two ways of having payment in accounting. It's either you are doing accrual, which is owing, and the cash basis. The accrual basis is you treat them when transaction occur. It is when transaction occur that you treat the accrual basis, and we talk about the cash basis when the cash are paid. The government institution treats transaction in accrual basis, while the private individual institution treats in cash basis. That's number 16. Then the number 17 is chart of account. The chart of account is the categorization of financial transaction. The account that is important, we have the chart of account, we have the ledger. These are chart. We have the organogram. We call it in company, we call it organogram, but it's a chart that gives you the importance of each account that comes your way. These are terminologies that you ought to know. These are fundamentals you ought to know for you to make grab of the account as an accountant. There are fundamentals you have to know. Then that's number 17. That's chart of account. We have another one, general ledger. It's a central record of financial transaction. We have ledgers from every quarter, but if you want to know it at a go, if you want to have your financial transaction at a go, you want to know what is really going on, you have to prepare what we call the general ledger. General ledger is a central record of financial transaction. We have income statement. Income statement is a statement. It's not an account, because an account must use you must follow the rule of double entry system, that the debit side and the credit side must occur there. But a statement is also a right in accounting procedure. So income statement is a statement that shows the revenue, the profit and expenditure of an entity. And when I mean an entity, I mean a company. It's in a financial year. It's a statement that shows the revenue, the profit, and the expenditure of an entity in the financial year. In the financial year, the financial year of an accounting is just a year period. It's a year period. It will start from January to December. It will start from January to next January. Then the next one is account payables. Payables, that's the money that the company owns to the outside world. The money that the company owns to their creditor is all called account payable. We'll be talking about that in our subsequent bulletin. Then we have account receivable, just the opposite of payable. The money that the company owns. That's where the company that the money that the company owns is all called account receivable. The money that we want to receive from our debtors. You know, there is a difference between the debtors and creditors. So we have the creditors that people are owing. We have the debtor, the people that is owing the company. So that is that one. Then number 20, we have depreciation. By definition, depreciation is the wears and tears of assets, especially fixed assets, due to passage of time, due to technology, due to wears and tears. So it's the wears and tears of assets, and fixed assets is what we are talking about here. But the one that is also relevant to depreciation is amortization. Amortization is a strange name in accounting. The strange name in accounting. If you are not that close to accounting, you don't know what they call amortization. It is just like depreciation, but this time it is for intangible assets. We have intangible assets. We have tangible assets in accounting, but we have intangible. Intangible assets are those assets that will perish within 1 year. They are not tangible. Not that they are not strong, but they are not tangible. Then the next one on my list, that will be on the list, is prepaid expenses. You know what I call prepaid meter? When you pay in advance. The goods you have, the service you have not used, you are paying in advance. So it will be treated in trading profit and loss account as an advance payment. It's an advance payment in accounting. Then we have what we call the current assets versus the non-current assets. Current assets are those assets we use in running the day-to-day activities of our company. So the assets like cash, like debtors, current assets. So the non-current assets are those assets that are not current but they are fixed, like fixtures and fittings, our car, our machineries, they are non-current assets. Then we have the another one, current versus long-term liability. Current liabilities, I've told you yesterday that current liabilities are the creditors that we have to pay. Then there's the liabilities that we have. Then the long-term liabilities are just like the debentures. Debentures are certificate of indebtedness to a company, to an individual by a company. We are still going to talk about that. Equities, these are the owner's claim on assets after liabilities have been met. The owner claims on asset. Equity is just like shares. Equity shares is the owner's claim on assets after we have paid all our liabilities. That's why we have to do what we call dividends. So we'll talk about that too. Then we're going to revenue recognition. We recognize it when it earned, not when it is received. In accounting, we recognize revenue when it earned, not when it is received. That's it. That's just the law. We recognize revenue when it's earned, not when it's received. Then variance analysis. This is an analysis, a comparison of actual figure for the last year to this year on an accounting item. You want to compare variances. What do we do last year and what do we do this year? And that's the budget, and we'll talk about the budget and the actual. What do we budget this year and what are we able to achieve this year? That's what we call variance analysis. Then we have another internal control. This is a mechanism that we use in accounting to control fraud and errors in our organization. Internal control, it's headed by an internal auditor and an internal financial controller. That is it. Internal controls is a process of preventing fraud and mistake and error. You know, there is a difference between fraud, mistake, error in accounting. I'm going to tell you all that about it on this channel. So you have to stay tuned, you share, you like, and you subscribe to this channel if you really want to know about the financial world. Then the second to the last is tax compliance. In an organization, if you are not paying tax, you are not doing well to that organization. Because when government provides basic amenities, social amenities, you have to pay tax to enhance the business environment. So we have the compliance, the regulation of tax, what you need to pay to the government, to the local government, to the state government, and to the federal government. You must have compliance. So it's adherence to law of tax. Adherence to law of tax, like the 5% VAT that is charged in Nigeria, it is adherence to the law of the federal government. Next item in this our lecture titled 30 Fundamentals of Accounting and Finance. I have the last item here, which is trading profit account. We call it trading profit and loss account, but most of the time it's always profit. So it's trading profit and loss account. So trading profit is an account that shows at the end of the year the profitability of a company or the profit margin of a company. I hope with this analysis from the 16 to the 30, you're able to grab one thing or the other about the 30 fundamentals of accounting and finance principle. I want to urge our viewers that please help us share, help us like, and help us subscribe to this channel, Pre-Versity YouTube channel. We'll be coming now, and the next topic we'll be doing is one of these items. We'll be taking it in larger term. Then we want us to continue to view our posts. Thank you and God bless.